Impact of the financial crisis on the insurance industry was similar to that left behind by Hurricane Katrina. How will the industry recover? Bill Chrnelich heads up the PriceWaterhouseCoopers insurance practice and is a 30-year industry veteran. He joins us now with his perspective on what's ahead for insurers. Mr. Chrnelich, welcome to Bloomberg News. Thanks for coming in.
Thank you, Mark. My pleasure.
Laura Lee just gave us a report, Managed Care Index. We see it at a 52-week high. We're also hearing those reports on Capitol Hill. If we could talk politics just for a minute.
Certainly.
About perhaps the public option being taken off the table. How will that affect the landscape?
It should affect it favorably. I don't think the health insurers wanted to compete with the federal government for business.
Why not?
Because in the end, the federal government has the ability to set prices pretty low because, frankly, they don't have to put up any capital. The private sector has to put up capital and put it at risk. And that means their prices have to be sufficient to get a sufficient return on that capital. The government doesn't have to do that.
The federal government's the house. They're the
right,
casino,
the
and the house always wins?
Exactly.
A report, PriceWaterhouseCoopers, a recent report. Let me read part of the excerpt from it. It says, the financial crisis has already proved to be a watershed for the insurance industry in many parts of the world. What customers, investors, governments, and regulators expect from insurers is changing rapidly and pervasively, and the developments we see today are only the beginning. What developments are you referring to?
I think we're referring to the damage that's been done to many of the insurance balance sheets, their investment side, some of them their benefit side, and that's left some companies less strong than they were before. On the other hand, some companies were well prepared for this, and they're very strong. So our view is you're going to see some consolidation, some merger activity, and on a global basis. If you think about damaged balance sheets, difficulty in predicting future sales and revenues, and for foreign buyers, a very weak dollar, we think the stage is right for significant consolidation.
And is that weak dollar critical? Is that key to foreign investment?
I don't know that it's the only factor, but it's certainly an important one.
Yeah. Talk to me about at least the risk that is still out there. Is the worst still over, in your opinion?
We think the worst is over, but it's not all over. I've said to my clients, think of the action movies where the good guys have knocked down all the bad guys, but there's always one who's not completely dead and he has a gun. So there's always something coming, and I think in the life insurance industry in particular, the commercial real estate sector continues to be a threat. Talk
to me about the difference between too big to fail and not big enough to thrive.
That's a difference that I like to talk about, because too big to fail suggests the government would step in and not let a company go down. But there are football fields and football fields between that and big enough to thrive. And I think we found through this crisis that smaller, weaker players really got damaged, severely. And for them to thrive is going to be very difficult.
And they are the bottom tier of the insurance industry,
They're the bottom
correct?
tier. If you take the bottom 20–25%, they're going to spend a lot of time trying to rebuild their balance sheets and their capital and their distribution and get back into being a thriving company. And I suspect some of them would be better off merging or being acquired rather than trying to get up that hill.
When's there going to be regulation on a national level? Right now, insurance is regulated at the state level.
It is regulated at the state level, and the state regulators are doing a pretty good job for the policyholders. That's their goal. A federal regulation is something some companies would like to see. They'd like to see it if they could shed some of the state regulation. They really don't want both.
And we should mention that regulation is not only state to state, but it's firm to firm as well.
It is, exactly. I mean, if you thought of the auto industry, if they had to have different pricing in every state, different features in their car, and different size tires, we'd be paying a lot more for automobiles than we are today.
Looking forward, even with this uncertainty, and you said most of the risk is over, there is still uncertainty out there.
Yes.
How can the insurance industry possibly project a year out?
It's very difficult. One of the words your reporter used was uncertainty out of Washington, and that is a big factor. There's uncertainty on the tax front, there's uncertainty on the regulatory front, there's uncertainty on the pay front, the compensation front. And it makes it very difficult for insurance companies to strategize and plan ahead for any decent period of time. They're doing it, they're doing the best they can, but they know that any one of these uncertainties, if they come home to roost, could severely upset their plans.
Sir, in our last 30 seconds, I want to get back to politics just 1 second.
Sure.
You think the industry's been unfairly beaten up by Congress through this whole debate?
I think the industry probably falls under that umbrella of Wall Street, and the entire Wall Street and financial services sector has gotten beaten up pretty badly. Not unusual in our history, having been in the business for 30 years, different sectors get in the barrel at different times.
How's the regulation, the proposed regulation, going to change the insurance landscape?
If we get good federal regulation that overtakes some of the state regulation, we'll see a drop in the cost of insurance products that are important to consumers.
Bill Chrnelich of PriceWaterhouseCoopers joining us on set to talk about insurance reform. Sir, a pleasure to meet you. Thank you so much.
Thank you very much.